Red Bull gives you wings. That's what they told you. But here's what they didn't tell you. That one little can, the one that cost them pennies to make, built one of the richest private companies on planet Earth. No factory, no stock market listing, no debt. Just a can, a bowl, and one of the smartest money machines you will ever study. Today, we are cracking open the real cash flow of Red Bull in 2026. How much they actually make, how much they actually spend, and why this company might be the best business lesson hiding inside a grocery store fridge. Stick around, because by the end of this video, you will never look at that skinny little can the same way again. Red Bull was not invented in Austria. It was discovered in Thailand. Back in the 1980s, an Austrian businessman named Dietrich Mateschitz was traveling in Bangkok, dealing with brutal jet lag, when a local drink called Krating Daeng basically saved his trip. That drink was already popular in Thailand, used by truck drivers and factory workers to stay awake through long shifts. He teamed up with the Thai businessman who owned the recipe, tweaked it, carbonated it, and rebranded it for Western markets. In 1987, Red Bull officially launched in Austria. That one single date basically created an entire product category that did not exist before. Energy drinks, as a business, start with this one can. For years, people thought this drink was too weird to sell. It was expensive, it looked strange, and honestly, it didn't even taste that great to a lot of people at first. But Mateschitz didn't try to win on taste. He won on feeling. That decision, selling a feeling instead of a flavor, is the single biggest reason Red Bull is worth what it's worth today. We'll come back to that. Now let's talk numbers, because this is where it gets fun. In 2025, Red Bull sold almost 14 billion cans worldwide. 14 billion. That's close to 2 cans for every single human being on the planet. That pushed net sales up to a record 12.2 billion euros, which is around 14.3 billion US dollars. Revenue jumped more than 8.5% from the year before, and can sales alone grew over 10%. That's the fastest growth Red Bull has seen since before the pandemic. A drink company that's been around for almost 40 years just posted its best growth in 3 years. They sell in 178 countries, almost every country on Earth. And they did all of this with under 22,000 employees. Compare that to a company like Coca-Cola, which employs hundreds of thousands of people. Red Bull runs an absolutely massive global operation with a surprisingly small team. You don't need a huge company to make huge money. You need a lean company that makes a lot per person. So, where does all this money actually come from? Let's break it down properly. Stream number one, and this is the big one, is the drink itself. Around 97% of everything Red Bull earns comes from selling cans. Not merch, not events, not media, cans. That's almost the entire business sitting on one product. Now, normally in finance, having 97% of your revenue tied to one item would scare investors half to death. One bad year, one health scare, one competitor undercutting your price, and the whole company could wobble. But Red Bull has survived on this for decades because of stream number two. Stream number two is pricing power. This is the part that should really blow your mind. Multiple industry estimates suggest it costs Red Bull somewhere around 10 to 20 cents to actually produce one can. Ingredients, the can itself, the basic manufacturing. Now, guess what a big retailer pays Red Bull per can when buying in bulk? Roughly $1.87. And the final price you pay off the shelf, around $3.59 in a lot of Western markets. Let that sink in. They might be selling something that costs them a few cents for close to $4. That is not a normal markup. That is a markup you usually only see in luxury fashion or bottled water at an airport. And here's where it gets interesting. Red Bull doesn't even own the factories that make the drink. The actual beverage production is outsourced to a company called Rauch, and the cans themselves are made by a company called Ball Corporation. Red Bull owns almost none of the physical manufacturing chain. They are, at their core, a brand and a marketing machine that happens to sell a drink. That's not an insult. That's the entire genius of the business model. No factories means no massive fixed costs, no giant loans needed to build plants, and no debt sitting on the books. In fact, Red Bull has zero financial debt. Zero. In an industry where competitors borrow heavily to expand, Red Bull funds every single bit of its growth from its own operating cash flow. That means the money coming in from selling cans directly pays for everything else: new markets, new sponsorships, new sports teams, without ever touching a bank loan. That is an incredibly rare position for a company of this size to be in. Now, stream number 3 is where most people get surprised. Sports and media. Red Bull owns Formula One teams, football clubs, ice hockey teams, and just recently, an English rugby club. In 2025, they bought Newcastle Falcons, a rugby team that had actually finished at the bottom of its league, for around £39 million and rebranded it Newcastle Red Bulls. Now, here's the important part. These sports teams are not really separate businesses trying to make their own profit. They mostly exist as walking, running, racing advertisements. Every time you see the Red Bull logo on an F1 car flying past at 300 kilometers an hour, that is marketing you can't buy with a normal TV ad. That's the strategy. Own the stage instead of just renting an ad slot on it. They also run something called Red Bull Media House. This includes Red Bull TV, a magazine called the Red Bulletin, even a record label called Red Bull Records. On YouTube alone, their channel has grown into one of the biggest sports and lifestyle channels in the world, and even without huge revenue from ads directly, the content itself keeps the brand constantly visible to millions of young viewers every single day for free. So while beverage sales are 97% of the money coming in, sports and media are basically the fuel that keeps that 97% growing every year. Okay, now let's talk about the scary side. Costs. Because a company that sells a can for $4 that costs a few cents to make sounds like it should be swimming in pure profit, right? Well, not exactly, because Red Bull spends an enormous amount keeping that brand alive. Industry estimates suggest Red Bull spends somewhere close to a third of its total revenue on marketing every single year. A third. On a company earning over 12 billion euros, that is billions of dollars a year, poured straight back into sponsorships, athletes, events, and content. Payments to sponsored athletes alone crossed 1 billion euros back in 2022, and that number has only kept climbing since. Formula One is one of the biggest chunks of that spend. Running a top-tier F1 team costs hundreds of millions of dollars a year between engineering, staff, travel, and the car itself. And 2025 actually brought some real drama here. Christian Horner, the man who had run Red Bull's F1 team since day one, 20 years, was let go. Reports say his exit package was worth somewhere around £75 million. That's not a severance package, that's a small lottery win. It shows you just how much money moves around, even in the background decisions of this company, decisions that have nothing to do with selling a single can. Then add in the day-to-day operating costs. Salaries for almost 22,000 employees across 178 countries. Global logistics because shipping heavy cans full of liquid around the entire planet is not cheap. Distribution deals with retailers everywhere, from tiny corner shops to massive supermarket chains. And don't forget legal costs, because in late 2025, the European Union opened a full-scale investigation into Red Bull, looking into allegations that the company tried to restrict competition from bigger, cheaper energy drink formats. Legal battles like that aren't cheap either, and they can drag on for years. So after all of that, drinks, sports, media, marketing, legal costs, salaries, what's actually left? Here's the good news for Red Bull. Even after spending a third of their revenue on marketing alone, 2025 was their best year ever for operating profit. Record revenue and record profit at the same time. That's rare. A lot of companies grow revenue but watch their profit margin shrink because costs rise just as fast. Red Bull managed to grow both together. Because the company is privately owned, split between the Uavidya family in Thailand holding 51% and Mark Mateschitz, the son of the founder, holding 49%, we don't get the full detailed profit breakdown that a public company like Coca-Cola has to publish. But we do get one very telling number. Mark Mateschitz personally received a dividend of 648 million euros in 2025 from his stake alone, just from his slice of ownership. Not total company profit, just his personal payout for the year. That number alone tells you how much cash this business is generating underneath the surface. Why does this whole model work so well? 3 reasons. First, they don't own factories, so their costs scale without giant fixed expenses. Second, they built a brand so strong that people pay $4 for something costing pennies without blinking. And third, they reinvest almost everything back into more brand building, sports, content, sponsorships, which keeps demand growing every single year instead of flattening out. It's a loop. Sell cans, spend on marketing, marketing creates more demand, demand sells more cans. Round and round it goes. Now, let's get into some hidden facts that most people never hear about. Fact 1. Red Bull's brand alone, just the name and reputation, was valued at around 8.7 billion euros in 2025, making it Austria's single most valuable brand. That's not factories, that's not cans in a warehouse. That is pure perception, pure trust, sitting on a balance sheet as one of their biggest assets. Fact 2. In the United States, even with new competitors like Celsius grabbing headlines and stealing shelf space, Red Bull held on to more than 35% of the entire energy drink market in 2025. More than a third of every energy drink sold in America is still a Red Bull. After almost 40 years in business, they're not just surviving new competition, they're still the market leader. Fact 3, and this one is wild. Back in 2012, Red Bull spent around $50 million sending a skydiver named Felix Baumgartner up in a balloon to the edge of space and let him freefall back down, breaking the sound barrier with his own body. It sounds insane on paper, but the global media coverage from that single stunt was estimated to be worth close to the entire company's yearly revenue at the time. One jump, billions in free advertising. That's not luck. That's a company that understood exactly how attention translates into cash, decades before most brands figured out what going viral even meant. Fact 4, they own not one, but two Formula One teams under their umbrella, plus football clubs across multiple continents, an ice hockey team, and now that rugby club in England. Owning that many teams isn't about winning championships for the trophy case. It's about owning permanent, always-on advertising real estate in front of millions of fans, every single week, all year long. So what can a normal person, someone who is definitely not running a billion-dollar drink company, actually learn from all of this? Lesson 1. Brand is worth more than product. Red Bull's actual drink is not dramatically different from dozens of cheaper competitors sitting right next to it on the same shelf. What makes people reach for the one with the bull isn't the taste, it's the feeling that can represent. If you're building anything, a small business, a personal brand, even a YouTube channel like this one, the story you tell matters just as much as what you're actually selling. Lesson 2. Reinvest instead of hoarding. Red Bull could have taken all that extra profit and just sat on it. Instead, they pour it straight back into growth, sponsorships, content, new markets. For anyone managing their own money, this is basically the difference between saving cash under a mattress and reinvesting it somewhere that keeps compounding. Growth rewards people who keep feeding it. Lesson 3. Avoid debt when you can. Red Bull runs a multi-billion-dollar global empire with zero financial debt. Everything is funded by their own cash flow. That's not a coincidence, that's discipline. Whether you're running a company or just managing your own paycheck, staying out of unnecessary debt gives you freedom that leveraged competitors simply don't have. Lesson 4. Own your distribution, not just your product. Red Bull doesn't just sell a drink, they own the stage that drink gets seen on. The sports, the media, the events. Whatever you're building, ask yourself, do you just sell a product, or do you also own the place where people discover it? So there you go. A tiny can that costs pennies to make, sold for close to $4, wrapped inside one of the smartest marketing machines ever built, generating over 12 billion euros a year with zero debt and record profit in 2025. Red Bull didn't just give you wings. It gave the entire business world a masterclass in how brand, discipline, and smart reinvestment can turn a cheap can of liquid into an empire. If this video actually taught you something new, smash that like button. It genuinely helps this channel grow. Subscribe if you want more real breakdowns like this one. No fluff, just the actual numbers behind the biggest brands on Earth. And drop a comment telling me which company you want broken down next. Until next time, this has been MoneyBruh, and I'll see you in the next one.